Welcome to County Portal, your simple source for local government services and public records. Let's get started.
So you've got your pre-approval letter and you're out shopping for a home, but then a scary thought pops into your head: can the underwriter still deny my loan? Let's talk about how often that actually happens and, more importantly, why it happens so you can avoid it. The short answer is, it doesn't happen all the time, but it's not as rare as you might hope. A pre-approval is a fantastic first step, but it's not a final, legally binding promise of a loan. Think of it as a strong conditional approval based on the initial information you provided. The real yes or no comes from the underwriter, who does a much deeper, more detailed dive into your finances and the property itself. The number one reason a loan gets denied after pre-approval is because something changed in the buyer's financial picture. Did you quit your job or get laid off? Did you go out and finance a brand new car or a living room full of furniture? Lenders recheck everything right before closing, including your credit and your employment. Any new large debt will increase your debt-to-income ratio, which could be a deal-breaker for the underwriter. So, the golden rule is simple: once you're pre-approved, don't make any major financial moves. Freeze your spending and don't change jobs unless you absolutely have to, and even then, talk to your lender first. Another major issue is a drop in your credit score. Your pre-approval was based on the score you had at that moment. If you miss a credit card payment, max out a card, or even open a new store credit card to save 10%, your score can drop. A significant dip can be enough for an underwriter to pull the plug on your loan. Sometimes, the problem isn't you, it's the house. The lender will order an appraisal to make sure the house is worth what you're agreeing to pay for it. If the appraisal comes in lower than the sales price, the bank won't lend you more than the home is actually worth. This can kill the deal unless you can renegotiate the price with the seller or come up with more cash for the down payment. The property might also have other issues, like major structural problems or title issues, that the underwriter won't approve. Finally, documentation problems can sink a loan. Underwriting is all about verifying the information on your application. If you can't provide the requested pay stubs, bank statements, or tax returns, or if the documents you do provide don't match what you claimed, that's a huge red flag. To avoid this nightmare scenario, keep your finances stable, pay your bills on time, and be prepared to provide a lot of paperwork. Communication with your loan officer is key. If anything changes, tell them immediately. I hope this helps you understand the process a little better and what to watch out for after you get that pre-approval. It can be a stressful time, but being prepared makes all the difference. Thanks so much for watching. If you found this video helpful, please hit